Okay, so now we're going to go through adjusting order blocks. Okay, so as we spoke about in the previous videos, if you're looking for an order block, so in this case a bearish order block, it's the last up close candle before an explosive down move. Okay, so that's this point here. You can look at this as the highest point within the swing because you've got a lower high to the left and a lower high to the right. That makes the swing point itself. When you have this sort of scenario, you are looking at the last up close candle that caused the move down. All right, so you're looking for price to come back up into the open and the low. This is where you're going to go down to your lower time frames to start hunting for your entry point. Once you've got your entry point, you're then taking the trade in the new direction. Okay, so there might be scenarios sometimes in the market where you have an order block, so the last up close candle that causes a down move, but the candle following it has a higher high. So in this case, you've got a high followed by a lower high to the left and a lower high to the right. All right. Now, when you get this case in the markets, you're then going to adjust your order block position. You're then going to look for price to come back up into the open and the high of the candle after the order block itself. And the reason for this is inside that high, there's going to be a smaller time frame order block. So expect price to come into that point. Once you get price to come into that level, you're then looking for your entry and you're going to take the trade in the new direction. So that's the adjusted bearish order block. When we talk about bullish order blocks, it is the lowest swing point, so the last down close candle before the up move, okay, and you're looking for the lowest point in that swing. When you get the lowest point in your swing, you're then looking to see, has it got a higher low to the left and a higher low to the right? Okay, if it has, then your last down close candle is going to be your order block. You're then waiting for price to come down into the open and the high, looking to get your entry on smaller time frames to trade in the new direction. Again, going to adjusting order blocks, so we're looking at bullish order blocks here, okay? If you've got a down close candle with a lower low to the right hand side of it, you need to adjust your order block to that level, okay? So in this case here, the lowest point in this swing is actually this candle here. This is where you're going to start looking to adjust your order block level. Now you can see this because it's got a low followed by a higher low to the left and a higher low to the right. What we're waiting for now is price to come back down into the open and the low of that candle that followed the down close candle. You're then going to take your position and take your trade in the new direction. Okay, so I'm going to quickly go through an example of a bullish adjusted order block. Right? I'm not going to go through a bearish one, just the bullish one, but it's the same thing, just inverted, like we spoke about in the PowerPoint presentation. Okay, so if I zoom in on this area here, you can see this last down candle here, which actually caused a move out to break this high. Okay, so we had a breaker structure at this point here. Okay, that's the last down close candle. So as you're learning your order blocks, you would have learned that this down close candle is the one that caused the up move. Okay, so what I'm going to do here, I'm going to drop horizontal rays on the bodies of these candles here. Okay, so the red, I'll make it completely visible. I'm going to clone that here. I'm going to drop that on the bottom of the body here, so that's the order block that you would be aware of now. But if you look to the right hand side of that, right hand side of this order block, you actually have a lower wick right there. Okay, so what I'm going to do, I'm going to highlight the wick. I'm going to turn that in green. Okay, so all I've highlighted there, if I just drop this across one more candle, you can see that you've got the order block followed by a lower wick, right? So when you get your order block, look for the lowest point for a bullish order block, the lowest point in the swing. Okay, if you're looking for a bearish one, you're going to be looking for the highest point of the swing. Now, if I zoom out, we're literally going to play price through in quick time. And then we're going to see how price reacts when it gets back to this level. Okay, so this is the down close candle followed by the breaker structure with a lower wick to the right hand side. Okay, so we're interested in the wick itself. Okay, so when we're looking at order blocks, it's really good as well to see if you can find equal lows or equal highs right above. So if you're looking at a bullish order block, you're looking for equal lows to start accumulating just above the order block itself. Okay, if it was equal highs, you'd be looking for a bearish order block. You'd be looking for equal highs to start accumulating. So what happens then? Retail come in on a support bounce, put the stop losses underneath, and we're looking to drive through those stops into the order block in order to get a position in the new direction. Okay, so here you see a fake bounce. Still didn't touch the order block. Okay, and right there, so we came in, so remember these two red lines, that indicates the body of the red candle itself, which you would have been looking at as an order block, but we had the lower wick, right? So the lower wick is indicated by this green box. You can see the price went straight through the body of the red candle, okay, into the wick itself. Okay, so that's where we'll be looking for our entry points. And then you can see price took off. Okay, so this is an hourly chart, so it's quite a long trade, target above the highs. But looking at this now, you can see we had equal lows building up, so an accumulation of equal lows. We had a shallow run through, and then it rejected, came back in, bounced one more time, and eventually worked its way through, ran the stops into that order block there, and then price took off. Okay, so that is it for this video. I'll see you in the next one.